This is Scott Becker with the Becker Business and the Becker Private Equity Podcast. I'm thrilled today to be joined by a brilliant chief financial officer who has built one of the most fascinating careers that I've had a chance to watch. We're joined today by Brent Berger. Brent is currently the CFO of NXT Ascent. He's a Northwestern local graduate from Northwestern University, a brilliant person who has spent time at some of the best brands in the world, including brands like Tropicana and others. Brent, can you take a moment and tell us a little bit about your career and what you do as a core in your professional life?
Oh, absolutely. And thank you for the very kind words. And I'm thrilled to be on this on the podcast. So I'm currently the Chief Financial Officer of NXT Ascent. NXT Ascent is a consumer goods company that's focused on creating solutions kind of around every corner of the home. We've currently got two businesses that we've launched, both D2C businesses right now through our website and also on Amazon. The first business is called Adorn. Adorn is basically a business that's taken the most ignored part of your home, the mailbox, and we've rebuilt it with security, function, and design in mind. We've been around since 2024. That business is growing on a regular basis and soon to be in a Walmart, hopefully near some of the people listening to this. The second business we have is Soar. Soar is a basketball company, and it was created to give the hooper the tools they need to level up. Premium basketball hoops with full installation, and then also, kind of a cultivated environment of content, stories, and community. Like you mentioned, I also had the good fortune to work for some pretty iconic brands. I've been up and down the food chain. I've done everything from soy burgers to orange juice to breakfast sausage. And then I've also, had a pretty long stint in personal care products as well. So, I've really run the gamut of the consumer goods function.
No, it's really a fascinating career. When you work with founder-led businesses, mid-market businesses, and you've also worked with mega businesses, what are some of the things you see businesses do right? What are some of the mistakes they make? Talk a bit about that, and then where the CFO fits into a lot of that.
Yeah. So one of the things I will tell you, regardless of whether or not we're dealing with some of the bigger companies or, clearly that low mid-market opportunity is there's this concept of, and what you hear about all the time is that growth solves problems or sales cures all ills. From my point of view, growth doesn't necessarily solve problems. Growth audits them. If your unit economics are broken, scaling revenue means you're just magnifying the destruction of cash flows. So the things that I think about there are like, let's talk about that growth. Pricing wrong leads to getting more things wrong. Broken inventory processes break faster. A weak cash conversion cycle just chews through cash faster. So when I say, growth is an audit tool, that's how I think about it. I think one of the other things that tends to happen in these businesses is finance stays as a reporting function way too long. By the time a company needs real financial infrastructure, you're already behind. And it's not because the controller's not doing their job, but nobody's really taken the time to build the system that tells leadership what to do next. They're just really great at talking about what's happened. And then I think the third thing is sometimes revenue gets celebrated before cash is understood. Top line growth is one of those easy things to chase, but it's also the easiest way to hide a broken business.
Take a second on pricing and revenues, because we see so many businesses, and rightfully are so anxious to get customers and grow revenues that they price it away that it's very hard to build a profitable business. Talk a bit about the interchange of pricing, revenues, and profitability, and how companies use CFOs in interacting with business development, with CEOs, to try and get pricing right so you don't end up in the situation where you're doing more sales but not making more money. Talk a bit about that pricing component, if you don't mind.
Sure. So, when I think of pricing, I typically tend to talk about, gross margin. So, that's kind of the perspective I take about this. One of the biggest things that you see in companies is everybody always talks about gross margin. Gross margin is X. Gross margin is Y. Gross margin was this versus this last year. Gross margin, when they talk about it like that, is blended gross margin. And honestly, I think it's one of the biggest lies in low to mid market companies, because blended gross margin, it's like it's a report card. It's like what you did. It's not necessarily what you're doing. So when you think about pricing, that's when I really focus on unit economics. Like you need to understand by product line, by product, what your gross margin is, what your price was, what your discounting scenarios are, what your cost of goods are to get to a true gross profit. Because you may have a phenomenal top line, but you could be hiding a gross margin issue could be hiding in plain sight, Scott. And it's a byproduct of one of those things, but you really need to think about like, what am I going to do with that pricing? That's the thing you put in front of the customer. And you need to gut check what you're hearing from marketing, what you're hearing from the sales team. And you need to be the person that corrals those discussions and drives that process.
Thank you. No, I think that's so right on. And it's this fine balance because you need good enough pricing that you could actually pay your people and grow your business. But you also need good enough pricing that's not so high that your customers will buy what you're selling. And part of that's, are you selling to the right customers? Are you building the right business? Talk for a second about at what point does a growing business need a full-time CFO versus fractional or outsourced or just relying on a controller? At what point do you see that you probably really need a CFO?
So I think the trigger for that is when financial decisions are starting to outpace the current team's capacity to inform or answer them. And I think there are three big signals there. There are three big, kind of main events. One obviously is raising capital or taking on debt. You need that person that can build the model and defend it to a pretty sophisticated counterparty. I think the second thing is, or the second signal is when the board or your investors are asking questions, the controller is just not equipped to answer. And it's not because that controller is not talented. It's just because they're not the person that's sat across from PE sponsors and lenders before. And then I think the third one is when cash surprises are happening. When leadership's hearing about liquidity problems after they've already formed, that's not an accounting problem. That's a forecasting and judgment problem. And again, that's not to shortchange the work that's being done because the people that are doing that, they're doing what they know how to do. They're putting out their best effort. But those are the signals to me that say, hey, it's time to bring a CFO in on a full-time basis. We need somebody in that chair that's thinking about this stuff on a daily basis.
Take a second on key performance indicators, core metrics as a CFO. Sometimes I see leaders put in front of me 5 core metrics. Sometimes I see 100 core metrics. How do you decide what's a core metric and what to focus on? You mentioned a great point. Revenue versus actual collectibility, revenue versus cash flow, two very different things. If you're booking revenues but not collecting it, it's not really revenues. But talk about what do you see as, and you've been doing this for a long time with lots of different companies. How do you sort of focus on what are the top core metrics and KPIs that you think are the most important and avoid people being, sort of distracted all over the place?
Sure. There are three main ones for me. Cash position weekly, not projected, but what's actual. Like how much do we have in the bank today? And what do the next 90 days look like? Regardless of the size of the organization that I've been in, cash has been a paramount discussion. Back when I was in, I had a stint in commercial real estate. My job was cash. And, that was a company that was, at the time around $5 billion. And we were still having cash flow discussions similar to what I have today in a company that's, under 50 million in revenue. So cash position weekly is a critical one. And the second one, which I touched on briefly, gross margin by product line. You need to, like I said, blended gross margin tells you what the business earned. Production line margin tells you what the business is actually worth. At the end of the day, you need to be able to defend your products, your pricing, and when somebody sits out and looks to potentially buy you, you need to understand what your unit economics are top to bottom. And then I think another one is the headcount to revenue ratio. I mean, you've got CEOs, CFOs that approve headcount plans, but I think the ones that are really good track what those headcounts are producing. And that kind of those are the three that really stick out to me. But it all kind of looks into the one that I think could potentially be the most overlooked and the most dangerous gap, especially in the mid-market space, is that distance between EBITDA and cash. EBITDA is that metric that we all talk about over and over again. It's how we value companies, value deals, but that EBITDA to cash flow conversion is where so many things sit and reside and your problems exist. So at the end of the day, one of the things that I try to get my CEOs to think about is don't ask me if we're on plan. Ask me if we're generating cash. To me, cash is fact and profit's an opinion.
No, and I love that sort of the concept that cash really is king, and it's really the what businesses run on. Just like armies used to run on their stomachs, businesses run on their cash flow, and that's what you really need to reinvest, to grow, to double down. I love the concept on unit economics. I also love the ratio of revenues to people. Some business leaders pride themselves on having huge headcount. At the end of the day, we know that that's not often the answer. And revenues over how many people you have is within reason a better metric. I love that. And also the comparison of cash flow to EBITDA. When you take over as the CFO of a company, and you're often brought in a critical spot where they're either growing or they're needing to change out a CFO or they're doing something new or different. What are the 3 or 4 things that you try and look at right away to understand the health of a business when you come into the business? And you might have already partially answered this, of course, but talk to us about when you come in, what are the first few things that you want to get your hands around?
Sure. 3, and you're right, I have touched on them a little bit. First and foremost, cash position and forecast. I ask for a 13-week cash flow model. If it doesn't exist, that tells me a lot. If it exists and it's not being used to make decisions, that also tells me almost as much. The gap between what that model shows and what's hitting the bank starts to give me a place to think about where are the problems, where are the things that I need to address immediately. The second thing that I think about is the finance team quality. And to me, I don't assess quality by titles or resumes. I assess quality by work product. Clean reporting, delivered on time, that answers what happened, why it happened, and more importantly, what we're doing about it tells me about the type of finance team I have. Good finance teams hit those first 2 questions and they do a great job of it. The finance teams that can answer that third one, what are we doing about it? Those are the people that I want on my team, and that's what I look for. And then the third one, which I did touch on, was the EBITDA to free cash flow conversion. Anything that explains why the income statement looks one way and the bank account looks a different way, that's the stuff I want to look at, because those are the problems. Those are the things I need to attack. I'll tell you, I walked into a company where EBITDA was strong and sponsor was happy, but underlying all of that, underlying that EBITDA, working capital and debt service was chewing through cash, and the dots just hadn't been completely connected yet. And those type of gaps kill companies, and more, and in the world I run in, it erodes credibility with PE sponsors.
Take a second on a couple of things there. When you come into that situation and you find that things are not as leadership thought they were, how uncomfortable a position is that with the CFO, with the private equity sponsor? And you're not an alarmist by nature. You're a calm, thoughtful leader. But how challenging are those discussions? Do you ever feel like the messenger is going to get shot because you're delivering news they don't want to hear?
It hasn't been my experience yet. And, at this point, we're coming up on 30 years. And, I've been in, roles where I've basically been head of finance CFO for the past almost, over a decade at this point. More than anything else, the people that you're working with, whether it's PE sponsors, the executive team or whatnot, they want the answer. They want the truth. They want the story. And can it be uncomfortable? If it's something they haven't heard before, yeah, that creates a little bit of discomfort. But more importantly, that's one of those things that it happens, you get past it really quickly because you're looking at what really matters now. And that's where I find those discussions, tend to go. That's, and nobody wants to hear when there are problems, and nobody wants, the CFO to walk in with, the person at the dark cloud or whatnot. But, importantly, a CFO is here to help get to the truth, and whether that's good or bad.
100%. And talk a little bit about, you've worked with some great management teams, some great private equity sponsors. How do you know when you're working with a really good team, a really competent team? Are the things that you could see right away that make you feel like, hey, I'm with a team here that's going places, that's really doing things right? Are there things that you see when you choose to join a firm as a CFO that sort of leave you thinking this is the right team, they know what they're doing, and conversely, are there situations where you feel like, I don't really want to join that team because I'm not confident they know where they're going? Talk a little bit about that, Brent, about what gives you confidence when you're working with the management team.
Yeah. So one of the things that I think about when I'm looking at an opportunity is how do the people that I'm talking to, not only how do they speak about the business, but what do they say when they talk about the business? Am I getting business speak and jargon, or as somebody coming to the table and talking about like results, performance, things to focus on, margin? And like I said, one of my favorite things in the world is talk about product level margins. That kind of gives me a sense of the type of operator that I'm working with. So that's a big thing for me. When I get into situations where, I the picture isn't as clear. Somebody, and I've been in worlds where I've been given, in my past, I've walked into situations where it's here's the password to QuickBooks, here's the password to our bank account. And have at it. I know I've got my work cut out for me.
But
but
there's something you mentioned a moment ago. We end up periodically running into people that I think speak business rather than do business. And I love your perspective there on people that almost feel like they're going through the motions versus really getting things done. Can you talk about that for a moment? Because I've seen that throughout my professional career. A great deal of fantastic leaders, and then some that seem to be playing the role versus doing the role. Talk about that in terms of teams that really solve problems, that really want to know, that really want to work through things.
teams that really want to work through things know, like, to what we were talking a little bit about earlier, the 3, 5, 7 top KPIs they need to focus on. And, they can look at it on almost a daily basis and say, we're doing well or we're not. And if we're not, it's how to change things. And those are the people that I know, one, not only do they understand the business, they're passionate about it. And when you're in something that you're passionate about, like, you want to spend the time getting underneath the hood. You want to spend the time understanding the mechanics of it. And, when you cross paths with more of that kind of just going through the motion, one of the things that I notice is lacking, or it just comes off as superficial, is there's just no passion.
Absolutely. And you certainly see some people that are really good at executing, getting things done. Others that the buck never seems to stop. And you're like, oh my God, is anything really going to get done here? And I've watched it in different situations. Let me ask you another question, Brent. As you look forward, I'm going to ask you two different questions. As you look forward to the next 3 to 5 years, what trends in finance, AI, capital markets, or business operations do you think are going to have the biggest impact on lower and middle market companies? That's sort of one. And then second, I'm going to ask you a question about sort of where you see yourself. Where are you most focused and excited today? I know you're leading right now at Next and doing a tremendous job, but what are you most focused and excited about? And then what do you think are the big trends in finance the next few years?
Sure. So I might buck some of the popular things nowadays and say that, the biggest trend is in AI, in my opinion. I think the biggest trend is cash discipline replacing financial engineering as the primary value creation lever in private equity. I think that's the big trend. And, I'll explain that in a little bit more detail. When you think about the fact that there was a time period, when debt was at 3%, a social operator can be a genius just through leverage and multiple expansion. But with, the way debt sits today, one of the true ways to drive IRR is operational efficiency. And that's squeezing cash out of the balance sheet, accelerating inventory turns, and tightening the cash conversion cycle. So some of those topics like, working capital optimization, covenant management, inventory discipline, that, were part of some of the discussions in like the treasury aspect of managing cash. That's the kind of stuff that I think is board level now. And those are the conversations that are being had. So, that's kind of where I see that becoming even more of a trend over the next 3 to 5 years. But along with that, I will say that AI is the support. So what AI is going to do for us is compress cycle times, and that creates structural advantages. So your 10-day close is a 3-day close. Your cash forecast updates in real time. AI is the tool to assist, but it's not the answer. The judgment about what that output is, or more importantly, judging that output that's coming out of it, still requires somebody who's been in that room when things have been wrong and they've had to figure out how to fix it. The CFOs going forward that know how to use AI to compress cycle times and then exercise that operational judgment will have that clear advantage over everybody else. I think of AI as speed and the CFO as the calibration. And then,
but I love your point. I want to take you back to 1 second. You said
sure.
something, a while ago, during periods of the right vintage of investing, a financial sponsor, a private equity fund could do great by just investing at the right time and seeing multiple expansion happen over several years and then selling. And that works even if EBITDA and cash flow don't improve. What we've seen the last 5-7 years is we don't see that multiple expansion. The cost of debt's higher. And so you actually have to improve operations, not just financially engineer. And I love that point that you're making there. Let me take you back to where you were at, because you were mentioning something that I started to cut you off on, Brent.
Oh, no problem at all. Yeah, I mean, I seriously like that's probably, like I said, hands down, I'm convinced that's the biggest trend. What you just reiterated there. The other thing that I see happening over the next 3 to 5 years is this kind of shift in the CFO position in general. And I call it, the being a reporting CFO versus an operational CFO. I think historically we've seen a tendency where you tend to hire the reporters, and now I think the market itself is actually starting to price the difference between the reporter versus the operational person who can help change what happens next. And I see that shift accelerating, and I think that it's creating a real separation between the operators who can do both of those things and those that can just do one. I think that's the third trend. So that cash positioning and cash management as the first trend, AI is the supporting tool, CFO is the calibration, and that shift from reporting to true operational management. Those are the trends that I see.
No, and I love that, quite frankly, and we've seen that with CFOs throughout our career. A great percentage that are fantastic on the reporting, ships running on time, make sure everything gets cleared, the books get closed, et cetera, but not necessarily the strategic operator. And when you can combine those skills, you have people that are either can be the best CFO they can be, or could be end up in the CEO suite or CEO role as well. And I think that's right, having both those skill sets. Brent, take us through. Last question. What are you most focused on and excited about now as you watch business and what you're doing and so forth?
I love being able to have more information at my fingertips. It's funny, when my career started, the world of ERPs was just starting to scale up. We all heard the stories back then, and the Kool-Aid was served. ERPs are going to change everything. Well, it took a lot of time for that to really start to manifest itself. And then at the end of the day, you're still dealing with ERP systems where whatever data you put in is whatever information you put out. So if your process was broken before you put your ERP in and you didn't fix your process, you still have a broken process. You just report it in a different tool. So I think the ability to get to information and to understand data and to leverage tools like ERP and AI, that I get super excited about. Like the ability to be able to sit down and, you used to talk about all these cool cockpits where we're going to build this cockpit and this dashboard for the CFO. It's going to be living and breathing. Those were kind of pipe dreams, and they were these nice to haves, and they were built by, and built and sold to companies based on, hey, this is the world you can get to, but it was, mocked up data or data that was designed for a demo that's going to have an expected outcome. I think now you're getting into a world where you can chew through it. You can use things like AI to digest huge amounts of data and really cut to the chase on things and really kind of give you the information to make the decision. So if you think about what a CFO is supposed to be really, really good at, is being able to digest a ton of numbers, tell a story, but more importantly, have the bandwidth to opine on what's going to come next. that's what I'm excited about. I can sit down every day and I look at KPIs for businesses that we're running here at Next Ascent at a level that I've never been able to look at them before in any company. And there's not like this huge cost or this huge implementation. I can just get to numbers faster. And, I have the ability to say, okay, well, what did we do yesterday? And what can we potentially change today? And, we've had discussions about pricing in the middle of the month. And, being in a D2C business, we've been able to make some tweaks about things we do, whether it's offering promotions or whatnot. And we can see the immediate impact of it and actually kind of course correct in the month. That's the kind of stuff I get excited about. That's what gets me fired up about coming to work every day.
But that's a wonderful thing to be able to adjust, look at things in real time, and make decisions, which was just, and that's one of the things you talk about in terms of the AI world, the world of sort of being able to move information a little bit quicker, so you can make decisions with it a little bit smarter, a little bit quicker. I love that.
Yeah, and that's I I think that's one of the most powerful things about what I do, and that's one of the things I get most excited about. And it's amazing what you can do when you, you actually have the right information in hand. You don't spend a I've been in environments where you think about what the end of the month looks like. You take your 10 plus days to close the books, and then you sit down and you start explaining results, and you hear, well, we had prior period adjustment of this, accrual reversal of that. Like, to me, that's all noise. Like, what I want to talk about is, like, let's talk about volume. Where did we miss? Why did we miss? What are we doing right now in this month to make up for last month's miss? Um, you know, what are we seeing in terms of our costs? What are we seeing in terms of our mix? What are we seeing in terms of a new product launch? How's that look? Or, in my world today, if had a different, when we sell a mailbox, we put a mailbox together with the post, address numbers, and a flag and sell a bundle. How's that bundle performing? Is it driving sales? Like, that's the stuff that's really, really cool. And, I also see, some of this AI piece, like I said, as a tool to help you with the foundational stuff, the nuts and bolts, the debits, the credits, the AR, the AP, the bank reconciliation. So you get that stuff tight and locked down at a level that you haven't been able to do before. You have all this bandwidth for what I like to call fun finance. And fun finance is strategy, KPI measurement, you know, scenario
But I think that's
planning.
so important, because if you're not burning your team out and yourself out, getting all the data in the right place and getting the sort of monthly closing done, or getting the information you need, that if that becomes easier, a CFO doesn't have to spend so much time working with managing their team to get that done, and then can spend much more time thoughtfully as to, hey, can we make impacts here? Can we make impacts there? And or working with the CEO and the leadership team to make those decisions, because you're not so bogged down and burnt out by some of the core fundamentals that got to be put in place.
Absolutely, absolutely. But one of the things that some people on my teams have heard about in the past, I had this kind of like, you can look at the world in one of two ways. You think about FP&A. FP&A in a nutshell is financial planning and analysis. But you have to stop and ask yourself, how many situations have you heard about, been involved in, where FP&A was financial production and adjustment?
No, I think that's well stated. You're up in a situation where you put a ton of money in a team into financial planning and analysis. It often ends up being not right, not correct, and then you're back to production and trying to figure out where we're at and why didn't it not go right, because we don't have the FPA going in the right direction to begin with, and then you end up with you're spending a lot of resources and time on it and not really getting what you need. I think I don't know if I'm saying what you're saying correctly, but I've certainly seen that.
Yeah, yeah, you totally get what I'm saying.
Yeah, no, we've seen a lot of it. Brent, what a pleasure to visit with you again. Brent Berger, Chief Financial Officer, Next Ascent, just a brilliant leader. Brent, thank you so much for joining us on the Becker Private Equity and Business Podcast. What a pleasure to visit with you. Thank you so much.
Thank you so much. I really enjoyed the conversation and appreciated being a part of this.